Welcome to Deep Thought Productions. Today we are covering the latest critical updates surrounding XRP and the XRP ledger. Over the past 48 hours, the XRP ecosystem has experienced massive institutional ETF reallocations, unexpected regulatory stalls in Washington, and significant structural expansions on-chain. Let's break down the exact data driving today's crypto markets. According to official financial disclosures reported by The Street, a major ETF provider has revealed a massive structural sell-off of XRP holdings. The filing highlights significant ongoing readjustments within institutional funds. While overall infrastructure adoption continues to grow, these sudden fund liquidations are injecting immediate liquidity challenges and heightening volatility across primary digital asset spot markets. A separate SEC filing confirms that Grayscale's XRP fund disclosed the sale of $180 million worth of XRP. This substantial divestment has caught institutional managers by surprise. Market analysts are closely monitoring how these large-scale fund reallocations interact with existing order book depth as institutional asset managers adjust their Q3 risk portfolios. Following these ETF divestments, market prices have broken down, sparking intense debate over price targets. Analysis from CryptoRank asks whether the $1 level is back in play as institutional ETF flows turn negative. While enterprise adoption metrics remain steady, short-term technical indicators reflect elevated selling pressure and shifting derivative positions across major exchanges. This downturn follows a period of notable institutional interest. Prior to the latest sales, TradingView reported 4 consecutive days of positive net inflows into XRP spot funds. Multi-hundred million dollar capital allocations demonstrated robust institutional demand, underscoring the stark divergence between persistent long-term fund strategy and sudden short-term fund reallocations. On-chain data from CryptoRank reveals that XRP wallet activity has flipped negative as exchange withdrawals surge. Network monitoring shows notable shifts in active daily wallet addresses and wallet balances. While large token withdrawals can signal institutional cold storage accumulation, the rapid movement of funds is creating turbulence across spot and derivatives markets alike. A comprehensive report by Yahoo Finance explores why XRP has not hit new record highs comparable to Bitcoin and Ethereum, despite Ripple becoming a premier global financial institution. Although network validators and custody frameworks are operating at record efficiency, structural market dynamics, regulatory uncertainty, and asset distribution patterns continue to cap immediate upside potential. Countering market skepticism, Ripple President Monica Long announced that the XRP ledger has reached a true light switch moment. Long emphasized that institutional adoption is accelerating at an unprecedented pace. Increased smart contract execution, cross-border payment integration, and upgraded enterprise liquidity rails are positioning XRPL as a dominant institutional settlement platform. Expanding retail and institutional access, Coinbase has officially expanded its crypto lending services beyond Bitcoin and Ethereum. As part of its Everything app expansion, Coinbase now offers lending products for XRP alongside Cardano, Dogecoin, and Litecoin. This integration provides XRP holders with fresh utility and collateral options within top-tier regulated platforms. On the legislative front, BitGet reports that recent congressional actions show no bipartisan agreement on the Clarity Act. XRP holders had been anticipating clearer statutory standards and unified digital service regulations. The legislative deadlock leaves primary regulatory enforcement in a state of uncertainty, delaying the clear licensing guidelines institutional market participants require. Institutional inclusion faced another hurdle, as AOL reports Bitcoin and XRP are conspicuously missing from a prominent new cryptocurrency index. Despite strong quarterly wallet growth and multi-source liquidity depth, index creators cited strict weighting methodologies. Investors are evaluating whether missing from major benchmark indices impacts long-term capital allocation strategies for these flagship assets. Technical traders are closely following a fresh prediction from the prominent analyst who accurately forecasted the 2024 XRP price rally. According to BitGet reporting, technical chart setups suggest key support zones must hold to prevent deeper retracements. Traders are weighing sub-10 millisecond execution speeds and derivative order book depth to gauge the next macro move. On the technical development front, Daily Coin reports that XRP has added a brand new cross-chain route via a leading decentralized application. This integration enables seamless token routing between XRPL and external smart contract environments. By reducing compute overhead and optimizing cross-chain bridging, developers are opening expanded liquidity avenues for decentralized finance applications. Derivatives market activity is intensifying following the launch of Remitix, a new perpetual trading platform. Crypto News reports that XRP and Solana traders are flocking to the platform to capitalize on new leverage products. The introduction of deeper derivative order books provides institutional asset managers and sophisticated traders with enhanced hedging tools during periods of spot market volatility. Cybersecurity remains a critical focus for the community. Ripple Chief Technology Officer David Schwartz publicly shattered a sophisticated clone site targeting XRP holders, explicitly declaring it a scam. Schwartz urged users to verify domain authenticity and strictly follow updated safety guidelines to protect digital assets against rising phishing attempts across decentralized networks. Despite macro headwinds, net institutional capital allocations recorded multi-$100 million weekly inflows across select spot products over the broader quarter. Clearer custody frameworks and upgraded institutional licensing in global jurisdictions continue to attract long-term asset managers, even as short-term ETF profit-taking creates temporary price fluctuations. Underlying network metrics demonstrate robust fundamental strength. Active daily wallet addresses and smart contract executions expanded 18% quarter over quarter. Furthermore, validator node reliability and network efficiency metrics reached record highs following scheduled protocol upgrades, reinforcing the structural reliability of the XRP ledger for high-volume enterprise transactions. Looking ahead, the industry faces critical regulatory compliance deadlines. Regulatory oversight agencies across the US, European Union, and Asia have established a 90-day transition window for full operational compliance. Upcoming Q3 reporting deadlines will mandate strict disclosure requirements and audit frameworks for all digital service operators managing institutional XRP assets. The current XRP narrative presents a dual reality. On one side, short-term ETF liquidations and legislative stalls present clear market headwinds. On the other, expanding cross-chain utility, exchange lending integration, and accelerating enterprise deployment point toward long-term structural viability. Navigating these contrasting factors will be crucial for market participants in Q4. Thank you for watching Deep Thought Productions. Please give us a like, subscribe to the channel, and hit the notification bell so you never miss our breaking analysis on crypto markets and emerging technology. Let us know your thoughts on XRP's trajectory in the comments below. See you in the next update.